2 weeks ago, Cherry and I visited Ottawa, and Cherry was interviewing Ottawa real estate investors and her clients from the nonprofit space. For me, I was invited to, as a guest, a speaker of OREO, which stands for Ottawa Real Estate Investors Organization. It's a wonderful organization. I'm a member too, in case you're interested. Cherry was the other guest speaker, and she shared her experience about buying a new accounting practice, which we now own, which is called Otis Group. We closed in August. It's now October. With everyone looking to invest or improve their cash flow, along with avoiding long-term rentals, it's a very popular theme these days, and all the challenges that come with long-term rentals in Ontario and BC, business buying has been a growing topic of interest in our community. Elizabeth Kelly, who was a guest of the show, she actually detailed how she's been telling her coaching clients, to be looking for more businesses that are in real estate, um, but are commercial. For example, she mentioned motels as being a potentially good strategy. And funny enough, we have one of our clients, also OREO member Victoria Clooney, as an upcoming guest of this show. So make sure you like and subscribe on iTunes, YouTube, and Spotify, which are my personal favorite platforms, so you don't want to miss that episode. Cherry's talk explained the awkward first dating like dance that she had to do in order to submit an offer. She had to go through, a gatekeeper, which was the broker, and the broker only. So she had to do an interview with just the broker, and then she was able to get on a call with the owners of Otis, and then only then was she able to offer. People were pre-screened before they were allowed to offer on. And we were one of 5 offers. And if you can imagine that, business buying, even in a recession, can be competitive. My talk was on student rentals, a strategy which I've helped clients transact on over 100 plus properties in the strategy. The thing about student rental strategy is that what I shared in my presentation is it's awesome, because university students, they typically turn over every 2 or 3 years. As soon as they finish their program, either master's or undergraduate, usually those programs are usually 2, 3, or 4 years. When they graduate, that allows they leave, then they go home, they leave, allowing us investors to raise rents back to market. So hence we're not stuck backstopping our long-term tenants' housing inflation, which is how I feel about my several duplexes that I hold. We have parents sign guarantees for rent and damages, and we've only taken a small number of. We've never taken a university student to landlord tenant board among my clients' experience, and only a small number of college students, again, were ever taken to the LTB. Unfortunately, the worst student rental experience was a college student, and it happened to be my own property, but we'll save that story for another day. There's a strong investment case to avoid long-term rentals, hence we're seeing so many in our community, having pivoted to Airbnb, midterm rentals, flips, development, anything that avoids long-term rentals. Now, just recently, BC is looking to ban Airbnbs outside your own home. You can do it, so you'll be able to still Airbnb your basement or your garden suite, but otherwise, if it's outside your own home, so people with multiple properties, they're going to be having to look to pivot or face pretty severe fines. I think it's only time until we see the same for Calgary, or even a continued ban on midterm rentals. I don't blame the government, since they answer to voters, and voters' number one concern is about housing and maximizing long-term rental supply. Stupid democracy. So back to the OREO meeting. Before the OREO meeting, I had a blast with hanging out with Christian Spielvogel. If you don't know Christian, I highly recommend that you follow him on Facebook and Instagram, and his company Eliferous Properties. He's a former tech executive, like pretty high. He made it pretty high. His boss is one of the richest people in Canada. He's a sir. Anyways, if you're a real estate geek like me, you'll love his projects. Here, I have a picture in the show notes of Christian standing inside. He's on the second floor of his 7-plex that he's currently converting into a 12-plex. So he's adding 5 units. From 7 plus 5 equals a 12-plex. In the picture, you'll notice there's no floors. He's removed all the floors and subflooring. So we're having to walk and stand on floor joists, which is not fun for anyone with fear of heights like yours truly. I don't know why, but I continued up the stairs to the 3rd floor even, and one can stare straight down 4 stories, because from the 3rd floor I can stare into the basement directly. And I don't know if it's just a fear of heights thing, But for me, my experience, my imagination immediately visualized myself falling through the hole in the floor, bouncing around on my way down, and coming to a bloody rest on the concrete floor of the basement. Is that just a me thing? Is that a fear of heights thing? Anyways, Christian explained to me how the deal penciled, as in it worked financially, as a renovated sevenplex. So as is. So he could just renovate it, and as is a sevenplex, it'll work. Of note, he's not that kind of guy that pressures tenants to leave. He lets tenants leave naturally, so then he can renovate and then raise rents to market. But again, no pressure on the tenants to move out. He's not a cash for keys kind of guy. But anyways, but by working with his architect, by Christian working with his architect, he found a way to add 5 more units, which includes building an addition on the back of the property and extending the roof over that new addition, which needs to be done before it starts snowing. FYI, there's part of the roof is open. It's a bit of a crazy project. If you love rental projects, you'll love the look at this place. Anyways, I hear it starts snowing snowing heavily in the frozen tundra of Ottawa in like the first week of November. So pretty soon, like a week away. Anyways, Christian also took me for a tour of his commercial and mixed residential commercial properties in Almonte, which is a suburb of Ottawa, home of Canadian basketball legend James Naismith, who is known as the inventor of basketball. Christian was in the middle of a conditional purchase of a former post office, and it looks like a miniature parliamentary building. So it's tall, narrow, solid red brick. And of course, like all of our parliamentary buildings, that signature steep roof that's made of copper and it's stained green. So looks amazing. It has a clock tower as well. Super cool. The building is designated heritage, as you would expect. It's from I think it was built in like 1900, like 1900. So it's like 120 years old. Anyways, so there's rules and guidelines to maintain the exterior appearances of said heritage properties because they're turned to be significant. And I'm speaking in terms of architecture, the way they look. So while heritage buildings look amazing, maintaining the materials that go into them and the workmanship for properties that were built over 100 years ago is both challenging and expensive, especially if they make you reuse the same materials that were used in the original build. Can you imagine that? Anyways, so I tagged along with Christian and his daughter Veronica to meet with the local planner because again he's going through the diligent conditional period, so he's making sure he's crossing his I's and dotting his I's and crossing his T's. So I understand that Almonte is a small town, so we met with the planner, and she wears 3 hats. She's one half of the planning department, so she's a planner. She's also responsible for heritage and engineering. Again, she's only one of 2 in the planning department. They do have engineering staff, but they're engineers. She's one of the 2 planners. The meeting was productive. The planner was helpful. She shared with us about the heritage grant programs, which helps pay for Christian to maintain his properties. And because the property that he's looking at isn't conditional, he, as you can imagine, that a property like that has a ton of exterior stone work. So he asked where he could find a mason. As usual, city staff don't provide referrals due to potential conflict of interest and liability, so she referred us to speak to the head of an NGO, which means, acronym, non-government organization, a not-for-profit heritage committee, and also where to find him. And Mike is his name, and we could find him at the local textile museum, which is located only 450 meters away. She told us where to go. So again, appreciate that Christian's only a week and a half away from his conditional period being over. So time's short. So we leave the meeting with the planner and we walk to the edge of town to find the head of the heritage committee, Mike. We're in luck. He just happened to have just returned to his office in the textile museum. And consistent with my stereotyping of small towns, he's super helpful. He refers us to the top mason in town, the guy that almost everyone uses in town for heritage properties. So in true small town fashion, Sean the Mason lives just 8 doors down from the textile museum. That's right, 8 houses away, not even 150 meters away from where our current position. It's also on our way back to the car anyways. I'm laughing out loud as we walk out of the meeting, and I suggest to Christian we go knock on Mason Sean's door to see if he's home. Christian was thinking he'd call him the next day, but again, the Mason's house is on our way home. So we have his business address. We realize that when we get there, it's actually his home, because we come up to a residential home. We see in the driveway there's a contractor's pickup truck in the driveway of a Century home that's been immaculately maintained. Always a good sign when hiring a contractor, when their house looks amazing. We knock on the door. Sean's wife answers the door, and we're in luck. Sean is home for lunch. Just he was about to leave. We exchange pleasantries. We get Sean's card. Most importantly is that we book Sean for an inspection Monday morning at 8 a.m. I know I do have the silliest sense of humor, and social media has commented. Yes, I've received feedback on this show that I laugh at my own jokes, but please do understand where I'm coming from. We just completed 3 back-to-back meetings on foot within 90 minutes, and with success. We accomplished our objective. Found a mason, and we booked them for an appointment to go look at the subject property, to check it for the final condition, exterior maintenance. In a bigger city like Ottawa or Hamilton, this would take days or weeks of email and phone tag. It'd be very painful. Thank goodness for Sean the Mason. So he's actually given Christian a rough estimate. Thanks to his experience, localized knowledge, he's able to quote 25 times cheaper than a competitive quote from a large unionized company in Ottawa. 25 times cheaper. There's obviously a difference in materials being used. Obviously, there's a difference in material and labor costs when you're talking about unionized versus non. But again, 25 times cheaper. All it took us was like 90 minutes. Needless to say, the latter's quote, the big corporate quote would have killed the deal. But thanks to small town kindness and efficiency, the deal's still alive. Actually, no, sorry. Christian has since gone firm on the deal. We'll have Christian back on the show to talk about his investing and also this deal. I've been bugging him to build a course around commercial real estate investing, specifically around his specialty, and where he's been successful is identifying high traffic areas, because Christian's portfolio consists of commercial office, retail, and restaurants. So all generally considered the tougher parts of commercial real estate. He manages to make it work. He's got no vacancy, and he's got a lineup of people who want to rent his spaces. Oh, by the way, my name is Erwin Cito, and this is the number 81 business ranked podcast in the world per Apple iTunes, which by magic we achieved with only 17 listeners. We've been here since 2016 with over 300 episodes, over an hour each. Thanks to the success of my clients, we've not gone unrecognized. My team and I at iWin Real Estate have been honored as the Realtor of the Year for Ontario or Eastern Canada for 4 consecutive years. It's been an amazing journey since 2010, and as the saying goes, the only thing consistent in life is change, and I will do my best to stay ahead of the trends and reading the tea leaves. So this past iWin meeting, I was sharing my research on the problems that China faces. China is among the worst in the world for birth rate, well below the needed number of babies to maintain the country's population. Pretty much all of the developed world has the same problem, and Canada is not immune. But we are able to draw young international students, mainly from India, who hopefully will want to stay in Canada so that they get jobs and pay taxes. Back to China, though, their unemployment rate of young people aged 16 to 24 is over 21%. And demographically, there's a lot fewer of them than any other age group, except for maybe people younger than them. Housing costs are high, like here in the big city, no different than here versus the big cities of China. And between unemployment and expensive housing, do you really see China having more babies and being able to catch up and fix this problem? No. My point is, relative to the rest of the world, USA will dominate in terms of economic growth thanks to better affordability. They have their own oil. They have tons of excellent farmland, so they can grow their own food. Versus we pave over our farmland in the green belt. At least that's our plan to. And the Americans benefit from Mexico as their biggest trade partner in the world, and a source of low to mid-level manufacturing labor at cheaper rates than China. Point is, USA is nearshoring and reshoring its manufacturing. If you've been following the microprocessor manufacturing story, which is critical hardware to the AI revolution, the U.S. federal and state governments and local and municipal governments are investing hundreds of millions and billions in order to divest from chips made in Taiwan. Funny enough, Taiwanese chip manufacturer TSMC is building their own plant, a $17 billion plant in Texas. And then, coincidentally enough, I'm booking myself for a trip to Texas in January. Next month, I'm going to Ohio. This week, I'm going to Atlanta. Yes, I'm bullish on American real estate. I've kind of had it up to here with rent control real estate. And again, none of this is possible without a proper power team and financing. And from my experience, this was only made available just recently. My friends at Lend City, I have their contact information in the show notes. My friends at Lend City are the first and only Canadian brokerage I know of offering mortgages on U.S. income properties in the U.S. And these mortgages are strictly for income properties. That's why they can lend on up to 10 to 15 properties. Anyways, information's on the show notes. As I mentioned, I'm building up my power team. I'm going to Atlanta this week. I can't wait, as I haven't been this excited about real estate investing in a really long time. We're going to make real estate investing great again. On to this week's show. We have Calvert Home Mortgage Investment Corporation in the house, or Calvert for short. I teased them about they use an acronym as their website instead of Calvert, which everyone knows them by. Anyways, they specialize in short-term financing for flippers, BRRRR investors, even pre-construction investors who need short-term financing to close a property so that they may immediately sell said property. As a real estate geek, I enjoy learning about what's going on in the market, where investors are putting their money and their borrowed money from places like Calvert, where they're putting it to work. Where do they find deals? What cities, provinces, on or off market? And I hope you, the listener, enjoy geeking out as much as I do. I even turned the table on both Ryan and Garrett, who both live in Calgary, and I asked them where they invest their own money. For anyone who wants to lend their funds privately, which is a pretty common topic these days, I think it's a good idea to listen to how professional lenders invest their own money. Because if it's good enough for an insider, just have a listen to this show. For more information, their website is www.chmic.ca, or you can reach out to Ryan at chmic.ca. Please like, subscribe, leave a 5-star review on iTunes or Spotify or YouTube. Funny enough, our Spotify ratings are higher than iTunes. Therefore, Spotify is now my favorite podcast platform. Please enjoy the show. Ryan, Garrett, what's keeping you guys busy these days?
For sure. So Ryan from Calvert Home Mortgage. Garrett and I are just kind of on a trade show right now, visiting all of our clients in Ontario. It's been extremely busy, to say the least, within the company. So obviously we work for Calvert Home Mortgage. Planning out next year's volumes and targets. We're on a massive hiring spree right now. Just hired 3 junior underwriters, so the team's growing exponentially, which is awesome to see. Managing our portfolio. And just staying busy with what's going on in the market, trying to mitigate risk while aggressively growing the portfolio on good loans.
Right. Yes. Yeah. So sorry, I was going to ask you, what is the portfolio? So what can you give me more specific? What is the portfolio?
For sure.
Is it full of pet cemeteries? Like what? What's in this portfolio?
Definitely not. Be good. Single family detached homes primarily. 97% of our portfolio is first mortgages. The other 3% second mortgages. We focus on short-term lending in major urban city centers, so primarily populations 100,000 and above in Alberta and Ontario. And we really focus on 12 months and under loans, primarily lend to flippers, but if anyone requires a quick closing solution for a mortgage, it's a single-family detached home, where typically we'd like to be the first call to help out those clients. Most of our clients are real estate investors. We love the real estate investing community. Really carved out our niche in that aspect to help serve real estate investors in Alberta and Ontario.
Excellent. So this is a real estate investing show, so let's start there. Well, what are you guys seeing among real estate investors? Where are they focusing their money and where?
Yeah, well, we were talking about before the show that we had 60% of our book in Ontario and 40% in Alberta about a year and a half ago, I'd say. And then we had that big fall off at the start of 2022. And now we've shifted our book to 60% Alberta, 40% Ontario. So we've seen the real estate investor community in Alberta a little more bullish than the Ontario market. But that's not to say there's not good deals in Ontario too. Like a lot of our flippers are finding great deals, good buys, and they have more time. We were talking
And
about
probably
this
less
before.
competition.
Yeah, so
Quite a bit
like there's a difference now, right? Like you have more time to do your due diligence on these properties because they're not selling right away. So you can do your inspection, you can do all your numbers and stuff without having to put in an offer with no conditions and really quickly close and make a decision.
Right. Yeah. So imagine the phone calls sound different.
Yeah, quite a bit. Now we're seeing it in Calgary, right? Like Calgary is now the one where I'm getting calls from some of my best real estate investor clients, and they're saying, "I don't have time to do all my due diligence. Will you do this for me?" It's like, well, we still need this, and this. We're very quick, and we can fund deals in 24 hours in Alberta, but like we still need to see that they have a budget, renovations, what they're going to do to the property, and so we can understand what we think the ARV is.
Okay, so hang on. So to get a budget, for example, you need like a renovation quote, and that usually takes a bit of time. Like,
Yeah, but a lot of our clients are typically doing those themselves, and they roughly understand. Like if they're experienced, they know, hey, like I've seen this property, this is what I'm going to do, and we have a reno checklist that I think, have we sent it to you before?
probably yes.
Yeah. Anyways, it's a really easy way to just fill out, hey, I'm doing this, and this. We have all the different checkbox, and you can give us all the details about it. So it's high level, and then if they have to get a full quote, they can do that after the fact. But if we understand what they're doing to the property, it makes it easier for us.
So really, so these guys can really turn around their own financing in 24 hours.
Yeah, in Alberta. Yeah, because we can use one lawyer in Alberta.
What do you mean? There's only one?
Yeah, there's only one. So we have done up our own legal
Oh, sorry.
instructions.
There's not just one lawyer that does it. It's that you can both use the same lawyer.
Exactly.
Got it.
Yeah.
Yes.
Okay.
So we can use the same lawyer. Clients pick their own lawyer, and we have done our own instructions internally, and we send them to that lawyer to act for both Calvert and the client. So it saves costs and time, and sometimes when lawyers are dealing with other lawyers, it can take a lot more time.
So what about like home inspections and appraisals? Both for value and for rent, if you even require any of these things.
Yeah, really good question. So what makes us really unique is we have 4 appraisers that we use in-house that do remote valuations as long as the value is under 1.5 million and it's 4 units and below, done within 24 business hours. And I know that makes, out of all the private lenders or even mix out there, something really unique.
Right.
A lot of our clients do tend to buy properties off market, so just not having to deal if there's tenants or if there's a seller in there. They just want to offload it quickly. So as long as they have property photos, we hand that off to our appraiser. If they're flipping the property and they have the renovation summary that Garrett mentioned, then we either value it as is or as if complete if they're going to be doing renovations. And what we're looking for there is just like, number one, the client's going to make money. We're doing everything very conservative. They have a reserve fund. If they think it'll take 5 months, we're forecasting 6-7 months. Because from our experience, rarely are things ever done on time, on budget. So we just really want to see our clients successful. Even though we would make money off fees and interest, we don't want to do one deal. We really want to build a long-term relationship with our investor clients.
Right. So you mentioned photos. So let's actually reiterate what. I'm trying to make the listener who wants to bring you business.
Yeah.
what do they need to show up prepared with? You mentioned photos, a budget, but what else did you need?
Yeah, so
Did you actually need an agreed accepted offer?
Yeah, well, no, we actually don't. We don't. Not right away. Not right away. We pre-approve on a personal basis. So what we like to do is we like to get their information up front, which would be application, credit bureau, and their most recent notice of assessment. The other thing we're going to look into is if they have what sort of funds they have available for their down payment and their reno costs. So if we get those 4 things up front, we can pre-approve people on a personal basis so that when they find a property that they like, we can act quick and get a value completed.
Right.
And what Ryan was saying, we have 4 appraisers on staff. Ryan and I are both realtors in Ontario. We're never going to buy or sell a property, but we use it for data. So our appraisers can go online and check out the data internally and base it on your reno budget and reno details to be able to figure out what we think the as complete value is.
Right.
And so our 2 biggest underwriting criteria are they going to make money and do they have the money to do it?
Right. So your appraisers don't drive out to the property or send like a drone out there?
No,
Yeah.
we do a drive-by though. Like every single day that we do a drive-by to make sure that the property's there, for one, and then that it's in the shape that we think it is.
Okay, what if, like, you guys live in Calgary? What if the property's in Muskoka, Ontario?
We don't lend in Muskoka, Ontario.
Well, within reason. Like we have this
Yeah.
one fantastic company.
Yep.
I don't remember their name off the top of my head, but pay them per drive-by X amount of dollars. They complete them typically within 24 to 48 business hours. And then we do track all the properties that we lend on as well too, to understand what it sells for. And our appraisers have that as a KPI within our company,
Right.
to ensure that the appraisal that we actually, the value that we actually valued it at is within reason of what the property actually sells for. Typically we're within 2 to 3-ish%. Obviously some crazy stuff has happened in Ontario over the past few years, so there are some outliers, but Calgary, Edmonton, typically we're within that 2% mark of what the property actually sells for versus what our appraiser valued it at for.
You mentioned crazy. It depends on your context what crazy is. We'll dig into. We'll elaborate a little bit between, like, you know, markets in Ontario versus like Edmonton, Calgary, because it's all crazy in my opinion. So again, let's go into let's elaborate a bit on the sandbox. So what are your clients typically doing? They're buying, like, give me an example. Like what kind of market are they in? Edmonton? Are they in a suburb of Toronto? Like what's the property? Like how bad is it?
For sure.
Are these like light renos? These major renos?
Yeah, the typical purchase that we see is probably around 4-ish, 3, like in Calgary. In and around 30 minutes max from downtown core. They're typically doing light cosmetic renovations, spending around $75,000. Really depends on the client as well too, but that's average typically what we see. They're in and out in probably around 6 to 9-ish months. Really depends the tradespeople that they use and how established the real estate investor is. Like if they have a whole tradespeople that report into them, they work for that real estate investor. Very different experience in terms of the systems that they have in place.
But that's a very small number. That's a very small number of investors
yes.
that have trades on payroll. But yeah.
Yes, most of our clients are business for self as well too. So on grand, they show that they're making, to be tax efficient, 30, 40 grand. As long as the clients have the capital as of today, from start to finish for the project, that's mainly what we're looking at if they're flipping. So we don't really take a look too much on GDS, TDS. It's as long as they have a profitable deal, they're going to be in and out in under 12 months. They have the capital. We have confidence in their business plan, but what they say they're going to do, that they're going to actually do.
Right.
And we look to vet that all internally, typically within 24 business hours. But to your point, average payout's probably in and around 9-ish months on the long end. And then they're selling the properties for, depending on the location and property type, high 6s.
Interesting. Like 6 to 9 months, that's a pretty long. To me, that sounds like a pretty major renovation. Are these houses like really ugly? Were they like hoarder houses? Like what are we talking about?
Yeah. So
and you still want pictures, eh?
Yeah. On average, it's 8 months. But like
that's long.
It's quite a long time.
This ain't no HGTV 30 minutes.
No. But like the average reno is probably around 50 grand. So, but then you have people doing the $10,000 reno, and then you have people doing $150,000 reno, and even higher sometimes. But on average, I'd say it's about 50 grand. But like we have one client who just pulls out all the junk out of the property, maybe paints it, throws it back on the market. And that seems to be the easiest way for him to make money, but that's not everyone's strategy. Like we want to assist every different real estate investor's strategy to make them successful. Yeah, we want to vet them all, right? Like we don't want to just limit to, hey, you can only do a 20 grand reno. Different properties are going to need different upgrades depending on where they are. But our main markets are the secondary markets. So like London, Cambridge, St. Catharines, Ottawa. Like we go to all those markets. We're not really too focused on the GTA. It's usually we're lending on properties that are around the 450, 500 range.
That's tough to find.
It is tough to find. So it's got to be in those secondary markets. We're not doing the GTA because things are We're doing some in the GTA, but
Can't
it's
even
got
get a
to.
condo for that.
Yeah, exactly.
Like,
So-
what's wrong with it if it's so much
Yeah,
more?
yeah.
It's probably got like a $1,600 condo fee if it's that price.
Exactly.
So, but I mean, we do offer products for those too. It's just we require more money down.
Yeah.
Because our range is you can put 25% down or more, or you can put as little as 20 grand down if it's a property worth 800,000 or less, a purchase price of 800,000 or less.
And where can the down come from? Is it cash? Is it home equity line? Is it second mortgage money?
Yeah, and any of those sources, gifted funds as well too, as long as they have a gift letter. Cash, it can also be debt, lines of credit, similar to your point. We also do blanket mortgages. So if you have a property with equity, value it as long as you have property photos. And property photos is essentially just like an MLS listing. So of all the bedrooms, bathrooms, kitchen, exterior, just to get an understanding of what the condition of the property.
Right.
Once we have that, we do a valuation on the property. And yeah, as long as the client's making money, then we'd love to help support. We do really focus on the lower end to mid price point of the market as well too. Typically from our history within the company, there's a threshold to how low property prices can go. From our experience as well too, typically we find that there's the most demand for the lower end to mid-market price point. It moves the quickest. Where we've ran into struggles before in the past is lending on higher end luxury flips. When the market decreases, typically obviously those are most susceptible to larger price decreases, which in turn could hurt or diminish our the quality of our loan if it decreases 2, 3, 400 grand in a short period of time.
Very cool. Yeah, like in Hamilton, for example, if it's under 600 grand, it'll go. Right? So actually, you raised a couple of good points. Actually, well, so many things you said just led to more questions. Like you mentioned, like MLS pictures, that led me to the question: how many of these properties are on market versus off? Like as in like how your client acquires the property.
Yep.
Yeah, good question. I'd say most of our real estate investor clients are buying them through wholesalers.
Right.
The majority.
What is that? 60, 80%?
Yeah, I'd say 60 probably. Could be more in Ontario because we only have one main one in Alberta, but Ontario's quite a few. So a lot of our real estate investor clients go through them. They have good relationships with them. Otherwise, they're going through a realtor that they trust, and maybe it's an off-market listing as well. But a lot of times we need to ask for pictures because they're not on the MLS. But we can get them through the wholesalers, and we have good relationships with them as well.
Good.
Yeah.
Because I'm sure you guys see some crazy stuff.
Oh, yeah.
Or even just like fake pictures.
Someone
else. MLS pictures from a different house.
Some of these properties are nasty, and it's kind of actually this leads me into the other side of our lending that we do, which we kind of talked about. But like we focus a lot on just short term, like Ryan said, short term. But it's not necessarily all flips and BRRRRs. We also do what we call an interim purchase, and sometimes these properties are just not in good enough shape for the banks to consider.
Right.
Like,
But it doesn't take much though. No toilet.
It
no
doesn't
carpet,
take much.
No flooring.
Yeah.
Is
So
enough.
like, if the bank appraisal comes back and it says it's in fair or poor condition, they're gonna say no, like almost all the time.
I got to
And
know
so-
for because my shrubbery was overgrown. But yeah, sorry.
Really?
Yeah.
Okay, that's another
They made
story.
too many exceptions. That's like shrubbery's
another
overgrown. Straw that broke the
Jeez.
camel's back.
But anyways, usually they get that appraisal back like a week within funding, right? And then they're stuck. And so they're like, well, I got to find someone because I can make this fix in like 2 seconds on this property. So they're like, okay, Calvert, can you fund this? We'll fund it short term. And then they do whatever they need to do to the property and then refinance with the bank. So we want to be that short term option to get people in those properties. Yeah.
And before we're recording, we were talking about interim also for like pre-construction folks. Can you share what kind of pre-constructions that you've seen?
Yeah, so we've done a lot of those lately. Like a lot of people have either they've bought it 3 years ago and the property's gone up in value, or 4 years ago, 5 years ago, however long these condos are taking to get built. You never know.
You don't know.
They always say an estimated closing date, and it's never close to that. It could be before or after, usually after. But anyways, so they go into these contracts, and then it comes up, and usually the builders and developers won't give them much time. They'll be like, okay, your closing's coming up now. You got to have your financing in place. And people who don't, will often come to us and say, hey, I've got this now, and maybe the property's gone up in value, and we can lend on that as is value. And a lot of them just want to sell it right after. They're like, okay, I have 40 grand equity, 50 grand equity,
Right.
sometimes more.
Right.
And
So
they're like,
they just need a
yeah.
bridge so they
They're
can
like,
close and sell.
yeah, they're like, can I just go to you, close it? We'll offer a fully open mortgage so you can pay it off the next day if you want. And they're good with that, right?
Right.
Like the banks, a prepayment penalty. Like we like the banks. What they do for the industry is good for everyone. But
For the masses, yeah.
for the masses, but like they do not like the short-term stuff, and the
Yeah.
prepayment penalties can be huge. So
Oh, they're enormous.
yeah. Yeah. So we love those kind of deals. And then same with if it's gone down in value, we'll still consider those, but we are going to consider them on the as-is value compared to the purchase price. So if it's less than the purchase price, we consider up to usually 70, maybe 75 if their exit's really strong on those types of properties.
And sorry, when you're talking about pre-construction, are these houses, these apartment condos? What is it?
Either or.
Either
Either
or.
or. We'll consider both.
Townhouses,
Yeah.
condos, single-family detached homes. Yeah, like we're seeing a lot of people now, unfortunately, not qualify. So if they bought it, 2-3 years ago and the interest rates were at historical lows, rates have gone up, they can't qualify anymore. It's essentially just a solution for someone to offload that asset in a timely manner.
Right. So even like a condo where there's like the interim position time,
Occupancy.
yeah, the occupancy period.
Yeah.
You can still finance them for the occupancy period.
Before the occupancy period, meaning
They would need title. We would
yeah,
need
like
title.
they have to have their own title. They have to take
So
possession.
they still have to live through the occupancy period then.
It would. Yeah, you're right. So it would depend on the contract what it states, and we would want to make sure that their exit it's what is based on the contract. Like if the contract has stipulations that they have to live there for a certain amount of time, their exit would have to abide by that.
Right.
So
Well, not necessarily live there, but you have to hold it.
yeah,
Yeah.
sure.
They can live there or rent it, leave it vacant.
Yeah.
It's kind of like it's theirs, but it's not.
Yeah, and some of those contracts are like 60 pages. Like they're extensive. So
We'll stick it through ChatGPT. And
There you
that's
go.
Call it a
That's
day.
Yeah.
right. It's getting easier.
What do I need to know?
Yeah.
That's my prompt.
Yeah.
So, you can literally ask it questions, but
Yeah,
so sorry. So can someone? So it sounds like it's kind of case by case.
it is for
So
sure.
your emails will be full with 60-page PDFs by Monday.
Perfect.
Yeah.
We'd love to review them. Yeah. if
Okay.
they-
Okay.
Hey,
Condo
there's-
docs are Garrett's favorite to review.
Oh,
All right.
yeah. No.
Quickly, how can people? How can they get their information to you? Where can they start the process?
Yeah, probably just our website is easiest, and you'll find both of our contacts on there. But website chmic.ca.
Why
It's
can't it
probably
just be
easy.
Calvert? Why can't it just be Calvert.ca?
We'll have to report that to Dean, the
Isn't
CEO.
that short enough?
We need to make
CHMIC.
I know, but
.ca?
who calls you that?
That's true.
Chick Mick, I don't know.
I know.
Schmick.
Yeah.
Yeah, yeah.
Everett, the founder, he wanted it to be close to CMHC. Like whenever you punch it into Google, so it comes up, I believe, with SEO and stuff like that. So CHMIC
It's tough
is
to
us.
say.
.ca. Yeah.
Because everyone calls you guys Calvert.
I know.
In the community, everyone calls you Calvert, and then
I
you
know.
go to try to find your
Yeah.
website,
Yeah.
or your emails. One more time.
chmic.ca.
All right.
Yeah.
Or if you have any live deals, I'll take them on. It's just Ryan at chmic.ca is the email.
Oh, you did that. You gave your email.
Yeah. Hopefully, I don't regret that.
Yeah.
It's hilarious. It's like I have guests that I still get emails from that podcast.
No
5
way.
years ago. Hopefully, actually, no. If you're still there, then it's okay.
Yeah, yeah.
But if you're gone, then yeah. Remember that Calgary deal you said for 400 grand?
Yeah.
Where can I find that? 10 years from now.
Too funny.
Oh, and so how do you guys invest your own money? Do you guys do fix and flips yourselves in London or Calgary, or what are you guys doing?
Yeah, I just have a few buy and holds right now, currently in Calgary. Just long-term tenants currently in there. But bulk of my net worth's in the fund within Calvert.
No kidding.
Yeah.
More of your net worth is in the MIC. Is it MIC?
In the MIC, yep.
Is more
Yep.
in the company than your own portfolio.
Correct.
In real estate. Okay, interesting.
Correct, yeah, yeah.
I think you're in the minority in this show.
Yeah.
Because most have much larger physical asset portfolios.
I'm actively looking right now for more properties within Calgary. Just haven't found the one that where the numbers make sense. I know it's a crazy market out there currently
Is that
right
bad
now.
already? Things don't make sense already?
You have to get creative.
Yeah, like anything 600 grand and lower is just moving. Like it's like Ontario was. Like we're now in the same situation. If I got to put an offer right away, or else I have no chance.
Yeah. So for the listeners' benefit, like Calgary's, like while most of the country is down in transactions and prices, that's not the opposite true. The opposite's true of Calgary, is it not?
Calgary seems to be the one market that is definitely in a seller's market still.
Yeah.
Yeah.
Like last I checked last month, there was 1.3 months of inventory.
That's really low.
Insanely low. I believe we actually are the hottest market in Canada currently right now, if not, to your point, when we were chatting earlier in North America or the world.
At least for a developed country, like, who else would be growing this quickly?
Yeah, we have like 30 to 50,000 people moving for the last 3 quarters just to Alberta. So immigration is really, really strong. It's wild how busy it's gotten over the past few months here.
Fascinating, because I wonder when that stops. Because again, like for example, I told you guys I'm looking at U.S. markets.
Yeah.
And all the good U.S. markets are also experiencing pullback in prices. So that's usually a sign that immigration and stuff like that. But like Calgary is like the lonely case.
Yeah. I know we did a lot of marketing in Ontario to move to Alberta. Very affordable, no land transfer tax. For me, the mountains, that was the reason why I moved out there. Just beautiful scenery, 45 minutes an hour drive.
No land transfer tax.
No land transfer tax in Alberta. And
There's
I know
2 in Toronto.
I know, I couldn't believe it. Like we're running numbers from deals that we get people flipping in Toronto, and it's insane how significantly you need to buy below market value just for the numbers to make sense.
Yeah, because you could be looking at like 30, 70 grand in land transfer tax alone.
It's insane.
Which is people's renovation budget.
Seriously, you're buying for over $1 million. Like, yeah. So we haven't done too many deals in Toronto. Just short-term purchases for people who are not flipping. They just need a bridge mortgage.
Right.
Like the sale date and the purchase date don't line up from the house that they're selling and purchasing for their primary residence. It's rare that we find people flipping in.
We've done a bit though. Like as long as our max loan amount right now is 1.5 million. So there are opportunities there. It's just they have to make sense with the numbers.
Right. But how common is that?
It's not that common.
Rare.
Yeah.
Pretty rare.
Yeah.
What is that then? Like, is it a fourplex, a triplex? Like,
what?
That's not
like 1.5.
Yeah.
Yeah. It's just single family right in Toronto, or like a row house.
Duplex.
Yeah.
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 Tough to make the numbers work nowadays. It's
a lot more risk than most are willing to take.
Yeah, because they're the holding cost. What if something goes wrong and you're holding this property for a lot longer than you expected? Like you got to have a huge contingency when it's that much of a purchase price.
I was talking to a friend on the weekend at the Rockstar event. They've been holding something for well over 12 months.
Oh my
4,000.
God!
It's a fourplex conversion. I think they're saying $4,000 a month just to carry it.
Jeez.
Not including like the renovation budget.
Yeah.
Right. That'll cripple some people.
It's definitely not cheap.
Average Canadian does not make 4,000. Does not take home 4,000 a month. Right. So,
yeah. Really tough.
So all the sexy real estate stuff, like a lot of it cripples people.
It does. Yeah, we've definitely seen
don't have all your eggs in one basket.
Yeah.
And that's the challenge with an Ontario property is, like any property really, if it's over 400 grand, 800 grand, like that's all expensive.
Yeah.
Especially when like some people, you guys experience it, like, I had Alex Soda on the show. I think they had 5 or 8 flips going at the same time, all with like none of their own money in it. So it's all interest bearing.
Tough to manage.
Yeah.
Right.
And I know historically from us, that's where we typically see the most issues. It's clients buying multiple properties at once. They try and manage too many projects at once. They're too optimistic with how long things will take. Think it'll take 7 months to complete. It actually takes 9 to 12-ish months. When you have those many projects, just managing the trades on multiple properties, it's very challenging to build the systems, the processes, to get things listed on time. If the market drops, whatever X amounts, and then to your point, having a contingency budget, it's
that was at like mainly the end of 2021 when everyone was like, oh, everything's great, everything's going up 30%
Keep
a
going
week.
up.
So it was like, let's just buy everything and it's just gonna go up, and the plan wasn't there. It was all anticipatory numbers.
I was hearing about like assignment, like wholesale fees of like 70 grand.
Yeah.
Yeah, I've seen a few six figures, quite a few in six figures from.
Yeah.
So like, how good was the deal that you had to pay that much, and then like, where's your renovation budget money going to come from? Like, how do you make these numbers work? How's everyone going to get paid?
I know. Still have to have meat on the bone for the client purchasing the flip, unfortunately.
Silly question: do you guys register your mortgages on title?
Yep. Every single one.
Have you ever run into folks where, because for example, if someone gets a promissory note, for example, how would you know?
Yeah, so typically they would register behind us and they would inform us, but otherwise we can always find it on title too if we pull them, but we're not regularly going to pull them. But up front, if we, just like any other lender, they expect you to tell them and be upfront and say, hey, we're going to do this, because for the most part we're usually okay if they do a second behind us, but we want to see the terms of that mortgage and make sure you can hold that and the numbers still make sense if you're doing that. But yeah, it's so important to be upfront with your lender. If we find out later, we're not as inclined to
be friends.
Yeah. Good way to put it.
We just need to understand what they were doing and why they did it. Yeah.
I bring it up because I knew you guys what you were going to say, but there's a certain wrong club out there where the owners are all being accused of not disclosing all their mortgages on properties. They're being accused of raising secondary funds, secondary mortgages, promissory notes on properties that were already 100% loan to value. But you guys are a proper organization versus these are individuals.
Yeah, the individual side with doing your due diligence, and like we've had times, and especially when, like I was talking about, end of 2021, everything's going up. There were a lot of seconds behind us that we didn't know about. And so they would call us and say, hey, like, what do I do? It's like, well, you should know that we're in first. If ours is in trouble, you're in big trouble because you're behind our security. So it's just, if you're doing private lending on your own, you really need to understand the due diligence that goes into these projects or these mortgages that we do, and understand the risks and how much management it is to handle these foreclosures or power sales.
Even on that note, from the borrower's point of view as well too, like if you're in a position where you need to take out a second mortgage, like the one thing that we could highly recommend is reach out to the lender as soon as possible, who's ever's in first position. Try and find a solution. Just be upfront, be honest, be like, hey, this is how the project's going. I think it's going to take 3 more months longer. This is my financial situation. If you're just honest, direct, and upfront, it's can significantly help just both parties be more collaborative and find a solution that works for everyone, as opposed to calling a week before your next mortgage payment's coming out and kind of asking for forgiveness.
Yeah, it's a good point, because we're a super relationship-based lender. We do a borrower interview on every single deal that we do. So we call the clients, make sure they understand the terms of the mortgage, make sure we're okay with their ability to service this mortgage and go through with the project. So we want to hear from our clients and want to understand what they're doing, what they're up to, and make sure they're okay, especially in difficult times. Like, we want to work with them. Our last resort is power of sale. Yeah.
I was speaking to another investor just last week, like talking about explaining the situation where like they were the second. So just hypothetically, say you're the second, say the first is a Schedule A bank, and you find out there's problems. Now you're calling the Schedule A bank. They don't even know who you are.
No.
Will they even talk to you?
That would be a Garrett question.
Yeah, typically. I mean, I don't know the bank side, and I don't know.
My point is, I'm guessing there's going to be some documents signed before they talk to you.
They will want to hear from us, because what will happen is if we have troubles in a second mortgage behind a bank, we're going to be making the bank's payments to keep them up to date and figure out this solution in the meantime. So it's a cost.
You need to talk to each other first.
It's
Will you
expensive.
take payments from me?
Yeah. They'll gladly. If someone's making their payments.
That's different from you guys, because you guys, how big is your book? 600 million or something?
No, we're 300 million.
300 million book.
Yeah.
Versus individual whose book is 120 grand.
Yeah.
Will a bank talk to you?
And 98% of our book is first mortgages. So.
Yeah. So you're in the driver's seat.
Yeah.
So people have to pay you if they're in the second.
Yeah.
So let's let the listener understand what that means. So say the investor, the owner, doesn't have to be an investor, the borrower isn't paying either the first or the second. Second position, whoever's the lowest on the line, they're at the most risk. What should they be doing now?
Yeah, like they should understand up front this could happen.
I don't think
That's
most
the first step. Yeah.
Because I think most people, if they understood, they would not lend to an individual on one property when there's much better options available.
Yeah.
And we'll get to that in a moment.
Yeah, it depends. like if we're looking at a second mortgage, we're typically lowering our loan to value. So like our typical loan to value, highest loan to value is 80%. We'll go to 85 on bridge deals. But other than that, when we're doing seconds, 75 is for sure the max,
Right.
And we might scale it back to 70 depending on the situation.
Right. So there's meat on the bone.
We have a buffer there.
Yeah.
But if the market turned like it did at the start of 2022, then you run into issues and you have to realize, hey, I could lose all my money in this second. I can make the payments on the first, take over the property, and I could rent it out if that's the case. And it's different. The rules in Alberta and Ontario are different, but it's quite risky. Like you want to get all the information up front, and obviously the property value is the most important thing because that's what you're registering your mortgage on.
So let's give some numbers then. Like, what is your typical first payment? If someone has to start taking over the payments of the first mortgage, how much are we talking? $500?
Well, our
$1,000?
average interest rate right now is around 11%.
Oh, so cheap.
That's our
Okay.
average.
No
That's
problem.
our average. So
My credit card charges way more.
I don't know the math off the
I'm
top of my
kidding.
head,
I'm
but
kidding.
11% on average, our mortgages are around 400, 450. So
So we're talking
math,
about $44,000 a year.
Yeah.
So almost $2,000 a month.
Yeah.
So my point is, I'm speaking to the listener who might want to do a second mortgage.
Yeah.
You could have to be paying out $2,000 a month.
You could be.
Like you got into this because you wanted a passive, easy investment that earns you cash
To
flow.
keep that updated. They might not make those payments, and they might like that. But what they have to understand is that mortgage is going to accrue interest until it is paid out. So like that $2,000 a month is going to keep accruing, eating into your equity while it's not paid out.
Yeah. So yeah, my math is terrible.
Yeah, I needed that too.
I'm the Chinese person that doesn't do math. So let's just do a 44,000 divided by 12. That's that's 3,666, right? So again, for the listener who wants to do a second mortgage, and these are not that big compared to Ontario mortgages. Yeah, you got into this to collect cash flow every month, and now you're shelling out almost $3,700 a month.
Yeah, if it's not coming out of your pocket, it's coming out of your equity in the property. So if you're not paying the first mortgage, then
is that easy?
mortgage is accruing.
I just tell Gary yo, can I pay on the back?
That mortgage is accruing, and the interest is accruing all the way until it's paid out. So the mortgage is increasing, eating into your equity in second position.
At least it sounds better than paying out $3,700 a month.
That's right. Yeah, it sounds a little better.
But at least we have to talk so I can get control of the property.
Yeah.
Like try to sell it, make us all whole.
Yeah.
Right. Make all of our lives easier.
Yeah, you can.
But I just gotta let you know there's no money.
You can pay out the first mortgage, which is even more. Our $400,000 mortgage, if you have that in your bank account.
Yeah. My point though is that people who get into private lending, they mean it to be passive.
Yeah.
And now and if you lend to someone across the country, all of a sudden you're very active. Yeah. You may have to finish the reno.
Yeah, I think we talked about it last time where Jesse and I both came from the same syndicated lender. So in the syndicated lender platform, it's you underwrite one deal and you send out that one deal to everyone on your list of investors that are out there. And those investors will invest either a chunk of it or they will invest the whole thing. But it's against one mortgage, right? And it's the same thing with private lending where it's against one mortgage, but you're doing all your own management and stuff. And then as is where Calvert is, we have 820 mortgages on our book, and the money is diversified across all those. So if you have issues on one, it's not going to impact you as much as it would by just having money in one mortgage.
Right.
Yeah.
And that's diversified.
And because I told you guys before, a lot of people ask me about private lending.
Right.
Like I don't do it myself, So then I naturally asked you, Ryan and Jesse, like, you guys, can people lend? So can people invest in your stuff? And that's what you were mentioning, that most of your net worth is in Calvert.
Yeah.
So can you explain what that means, that most of your investment's in Calvert?
Yeah, for sure. So you essentially purchase preferred shares within the company. We pay distributions on an annual basis on May 10th of every year. If you invest in our fund, it's similar to purchasing stocks on the public market. We do it through a company called Olympia Trust. So everything goes through a company called Olympia Trust. Your capital is quote unquote with us for 1 year. So we are a very illiquid investment. It's not like you can liquidate your stocks on the public market at any given time. For us, it's
But neither are private mortgages, but yeah.
Exactly. So you're with us for a year at a time. Currently, right now, our share, I don't know, are we able to share the share price of our fund?
They can reach out if they want to get into like the numbers, details, but I mean, we can just say like over the last 10 years, we were 10% on average, but yeah, we don't really get into it too much because most of the shareholders that we have are through our network, and our network will tell other people, and we've been in business for over 40 years.
Part of your network. So it's
Yeah.
17 listeners.
That's right.
And the funny thing is that I asked, because again, why would someone lend to an individual on one property when you can essentially own shares of Calvert and to be diversified across your entire portfolio?
So if you are looking to do it on yourself, you could get higher returns if you're doing it individually.
Assuming you're fully invested all the time.
Exactly.
Assuming you don't lose your shirt.
Exactly. So that can be, the grass is greener kind of on the other side. Why would I give someone my money when I can just do it and make, 1 to 3% higher? But there's lots of stuff that can go wrong, very time consuming. If you ever have to deal with anyone in arrears, that can be a full-time job, just trying to collect.
People in arrears these days.
Yeah, the main thing we have to say is like our returns are not, they're not flat. Like we're not doing the same thing. We're not promising anything. Like our returns vary on a yearly basis. That 10% I said is just on average over the last 10 years, but it can change. And we're deemed a high-risk investment, and we're an exempt market dealer. So we have to say this stuff, even though like our average loan to value on our book is 59%. Yeah.
And you guys don't even advertise this. You only talk about it.
Yeah, we don't. We don't do anything. Like if you go on our website, you won't see anything. You have to reach out to us, and then we'll have a discussion and talk about it. Because like a big part of it is you have to be accredited to invest with us. So you have to either make $200,000 as an individual, $300,000 as a household, or have $1 million in net financial assets. So it's a wealthier class to be able to invest with us.
I think it's interesting just to raise the point is you guys offer no commissions, nothing. You guys aren't paying me for saying this. You're not sponsored the show.
No.
Right? And you guys don't even want the money, really.
It's not financial advice.
No, it's not for sure. We have a lot of capital like available to our clients, so we don't necessarily need the money right now, and we just want it to be an option for people out there to be in real estate investing, but very passive.
I just think it's funny because most of what's out there, like people who ask to come on the show, people have ads and whatnot, they're all trying to raise money versus you guys are not even telling us.
We don't want to talk about it.
You're more interested in lending.
And it's not that we're very transparent when you get to know us. Like if you contact us, we could send you everything if we get to know you, but we just don't want it out there. It's not something we want out there. We're regulated by the ASC and we just don't want it to be a public matter, right?
But like I've told you guys, like I believe people need to know their options.
For sure.
Because again, you can be diversified across the portfolio and it's regulated under a securities commission versus a one-to-one relationship, one person, one property. Like what if the person gets hit by a bus or the bus hits the property?
Exactly.
That may screw up your timelines and turn your passive investment into something incredibly difficult.
Yeah. It's a full-time job.
Oh yeah. People need to understand that too. Like all these quit your job strategies.
Yeah.
Like you guys see you see your clients.
A lot.
What is the truth about? What is the truth then? I'm not accusing you of anything.
Yeah.
But what are these folks doing? Like in terms of their work-life balance.
You mean like
your
on the
clients,
real estate investor side?
Yeah, your real estate investors.
Yeah, like it depends how experienced they are and what knowledge they have in the industry. But I'd say the majority of ours are keeping a full-time job while doing this, and they have a plan in place. Like
Right.
they
So they're
come in-
hustling.
yeah, they
Yeah.
come into this like, I have my realtor set, I have my trades, I have a mortgage broker, I have whoever, and they're like, I have this planned out, and this is how I'm gonna do it. This is how I'm gonna execute, and they're ready to go.
Love it.
Like we don't
Yeah.
want to see. If I ask questions on the phone like, who's gonna do your electrical or whatever, it's like, well, I might find someone at Home Depot and just whatever, like just something random. It's like, well, that's not going to work out.
It's essentially pitching your business plan. Like, come
Yeah.
prepared, come with all of your ducks in a row, have a plan, show us that you have a contingency fund, and just outline essentially your business proposal. Like you're pitching to a joint venture partner or another lender. Just come prepared.
But most of a plan or a coach or something that they can rely on if stuff goes wrong. Like I think some of the biggest issues we've seen are people that have no plan in place, or a very basic one, and then getting into the cost later on and realizing, oh my God, like I just put this on a paper, this is what I thought it's going to cost, and now it's costing me 60 grand more. It's like, well, gotta get into the due diligence, especially if it's not your full-time job. Like you don't want it to be your full-time job. Like if you have to take over this project, it will be a full-time job. Yeah.
The friend I mentioned that I spoke to on the weekend, whose fourplex is just taking forever. Their original budget was renovation budget quote was $250, and then when it came time to start, it went up 50 grand. And so then they put a pause on that and went shopping, and they found out that other contractors are quoting like 400 or 500.
Oh, wow.
Right?
Did you know why it went up?
I don't know why.
Yeah.
But what I do know is about that contractor is they're generally always the cheapest. They'll get it done. It won't be on time.
Yeah.
Right.
Yeah.
So you know how it is. Like you can't get it all.
Yeah.
Can't be on time. Can't be on budget. And can't have quality all at the same time.
Yeah.
Yeah.
To give something has to give. Right.
Yeah.
So that contractor originally quoted, it would still be my first choice. I just know it's going to take longer.
Yeah.
But if you don't know these things,
Yeah.
now they just spun their wheels. Now they're delayed more.
Yeah.
Right.
I think the most important thing is just to be conservative when you're budgeting things.
Yeah.
Like so many people will come
And
and
deep
say,
pockets.
that helps. Like at least a good contingency.
Yeah.
But a lot of people come in and say, hey, I'm gonna renovate in 2 months, sell it in 1. Like let's budget for renovating 3, sell in 3, maybe.
Yeah.
And let's base it
closing's
on
gonna be
that.
60, 90 days.
Let's base it on that,
Yeah.
and then if it's still profitable at that point, then we know, okay, this is a good project to take on. But let's be conservative at the front, and then if things change, we can adjust. Yeah.
And I think novices especially need to understand that the more cash you invest, the lower risk it is.
Yeah.
Versus planning to use like your personal line of credit to fund your renovations.
For sure.
Right.
Yeah.
I think everyone can appreciate which one is lower risk. I hope.
Yeah. Do you want to confirm that?
Like what's personal line of credit money these days? 9%?
Probably in and around there. Yeah, 8-9%, give or take. It's
You mean
not-
like a home equity line?
No, just personal.
Just a personal line? I bet it's even, could it be, I think it's higher, isn't it?
Could be.
Could be.
Remember the good days?
It
we had
depends
Prime
on,
Plus 2.
yeah. Yeah.
But even HELOC money is expensive. Prime Plus.
Yeah, it's around 7.
Yeah. Yeah. So yeah, personal line
It could
personal
be.
money could be 9.
Yeah.
Or more.
not cheap nowadays.
No, not at all.
Because I feel the fatigue. I told you guys, for example, my next down payments will be cash.
Yeah.
Right.
Right. I'm tired of borrowing for my down payments. So you guys both live in Calgary?
Yep.
Both invest there
us.
too a little bit?
Yeah, like I'm similar to Ryan. I don't get into the rental side. I bought a house in December of last year, but I hold most of my financial assets in Calvert.
No,
and then
CHMIC, sorry.
Yeah.
That's
Good. Yeah, sorry.
Calvert
You're
Home
more of a
Mortgage
reporter than us. I love
Investment
it.
and then just stocks and whatnot. But I don't get into the buy and hold stuff. Actually, my wife and I had a rental property. We sold it in June, really recent, and we turned it was very good timing in June to sell it, but we just got sick of it. I was like, I can put it in Calvert, have this passive income instead of having to deal with tenants who were like, and they were great tenants. They were really good, but still there were issues. Fridge broke, furnace broke, washer broke. I think all in 1 year. And I was like, okay, well, I'd rather get the money out, especially now the market's been so good, and just invest it passively.
I think everyone needs to appreciate, like, understand their own values and make their own decisions. Like, for example, Elon sold all of his real estate at one point. None of it he had no tenants.
Right.
He just didn't want any distractions in his life.
Yeah.
You're trying to be like asset free.
Minimalist.
Minimalist.
We do
the richest man in the world wants to be minimalist.
We do have people in our office though that do real estate investing, at least 2 or 3. So they're doing it, and they do a great job of it. I'm not saying it's not a bad investment. It's just not my strategy.
Like, for example, my next investments will be single family homes because I want to simplify.
Right.
And then people are like, oh, what? You don't do an apartment building or like a, or like an infill or like. I've been at this for a while. I've seen it all. I understand what to do.
Can you tell us about that? Like why you've chosen to simplify on that side? Is it
just like
time?
Time, and also, I don't like negative cash flow. Like my friends who are spending $4,000 a month in carrying costs. I don't want that. I'm down for like a 30-50 grand reno for light BRRRR. And I can get like a 6-7 cap on a single family home in the States. So why do I need to be so aggressive? Because you guys seen, like, people kill themselves here.
It seems like multifamily is a big thing now. It's all multifamily.
But that's how scale you need to do to get like a 6-7 cap. But I can get that in the States in the single family home. So why would I be so aggressive and kill myself, especially in Ontario? Have a 30-unit building and try to turn a 3 cap into a 7. How much turnover and renovations you have to do?
Insane. Too much.
And how many people will hate your guts for it?
And how many tenants you have to deal with?
How many tenants? Well, those are the people who are going to hate your guts.
That's true.
But but that's another episode. No, so again, I know a lot of people on social media are Edmonton Bulls, which is why I always ask Ryan and Jesse, and now yourself, Garrett, as well. Like, what are the differences between Edmonton and Calgary? I know you don't live in Edmonton, but you made a distinct decision to live in Calgary, because I've never been to Edmonton, so I'll say that outright. But I've gone 3 hours north of Toronto, and it is small town. It is cheap, but it's like a totally different climate. And I say 3 hours specifically because Edmonton's about 3 hours north of Calgary.
Exactly.
And so I'm just trying to understand who would move to Edmonton. I've been to Calgary, and Calgary's lovely. I've been to Banff, been to Jasper. Edmonton, very multicultural. Again, it's 3 hours south of Edmonton. The weather's better, I'm assuming.
It's similar.
So my point is, I always do due diligence that we always talk about. So I ask people on the street, what's the case for Edmonton?
So I can't speak to it as well as Ryan and Jesse can, because they came from Ontario and made that decision. But I was born and raised Calgary, so I've never really chosen, but I've chosen to stay because. But
you could go live for cheaper in Edmonton.
I chose to stay. I bought a place. I have a 7-minute drive to work in the morning. I can walk in 40 minutes. I've got a 900 square foot lot, or sorry, square meter lot. 900 square meter lot.
Sorry, what's that in feet? I'm serious. I can't remember.
In feet?
What is that? 4,000? 3,000?
No, it's higher. Yeah, it's a larger lot. So you have all this space, and it's a good spot to grow up with the family. Like,
it's a beautiful neighborhood.
It's wide open and right by the river. So it's just an enjoyable lifestyle.
For me, why I moved to Calgary versus Edmonton, you primarily have the mountains there. I'm a big outdoors guy. I'm in the mountains pretty much every other weekend for skiing and snowboarding. Edmonton certainly is cheaper. I've done a few work trips over to Edmonton. Personal preference, I just like Calgary. I thought it was, I don't want to say nicer, but I'll use nicer for an easier way to explain it. And then I guess just my relationship with Calgary. Like, went out there when I was a young kid, first trip out to Lake Louise, and just always told myself I'd live out here one day, me and a bunch of the guys that I grew up with. But a big reason why people do move to Edmonton is it is quite a bit cheaper as opposed to Calgary. So just your living cost would be a little bit cheaper versus Calgary.
what I'm trying to get after is I'm trying to understand people's investment business case for investing in Edmonton, because the people like for the longest time people were always talking about Edmonton. Calgary seemed to be like very distant second, versus to me, like again, just a bias is if I was going to live somewhere else, if I was going to live in Alberta, it would be Calgary.
Yeah.
And so again, I'm just on the search for like other people's opinions.
And I know, Garrett, I think you mentioned it earlier as well too. It is a little bit easier in order to legally suite from like an investor point of view. Basement suites there versus Calgary. So that would be.
But lots of people have suites in Calgary. Is it that hard?
They do. It's just a longer process.
Yeah.
Like 2 weeks, 6 months.
No, it'd be months. Yeah, it's just easier to do in Edmonton based on what they've provided for their housing market up there,
Right.
And their rules and regulations around that. But overall, it's just Calgary has provided more opportunities too, and it's higher salaries than Edmonton. But there are pluses and minuses to both. It's just Calgary right now is the hotter market, has no supply, like Ryan said, and yeah, it's just it is a nice place to live.
more desirable,
Yeah.
I think.
Yeah.
Ease of development actually makes prices typically cheaper,
Yeah.
which is one of the reasons why a lot of U.S. markets, housing is a lot more affordable.
Yeah.
They have a lot of land. Again, just less red tape. Versus here in Ontario, we have tons of red tape, which
Right.
forces values up because
Yeah.
it limits supply. So if it's so easy to develop in Edmonton,
It is
then
easier.
then that
yeah,
then
easier
that
to get
keeps
permits
prices
and-
down.
Yeah. Yeah.
Keeps both rents and housing prices down.
Yeah.
So again, I'm trying to understand the investment case, and you guys aren't helping.
I'll speak to some real estate investors that we have
Yeah,
specifically in Edmonton. I'll get back
I'm
to you
sure
on that
people
one.
are gonna be hating my
They're
guts.
good.
I really think it's just the
It's
cheaper.
cheaper.
cost.
It's just cheaper. Yeah.
That's it.
Yeah, it's cheaper in Sudbury and North Bay. You wanna
But
live
it is a
there?
major city as well too. Like I think
It's a major city.
like 1.2 million
Yeah.
population.
Probably around a million.
Up in Edmonton. So
Yeah.
still a major city. Obviously has all the amenities. I don't think traffic's too bad there.
Yeah, I don't know. I don't go to
I
Edmonton
rarely
enough.
go to Edmonton. Yeah,
Yeah.
nothing against Edmonton, but Calgary's just I think it's the place to be.
Right. So it's not even a tourist hub then.
No, there isn't much to do there unless you're a sports fan. Like I know the Oilers are.
Coming
You
from
don't
the
have sports
coming
in
from the
Calgary?
Calgary guys, yeah.
Yeah.
Yeah, I
They got
shouldn't ask-
McDavid
Yeah.
there.
Shouldn't ask your opinion on their on their sports team. All right. Anything else that we haven't covered?
I don't think so.
Did I get you guys on everything?
Yeah, we had a list of stuff, but no, I'm
I had a question.
Yeah.
Because you guys are in the community, you must be on the other end of all these OPM courses and coaches. How's that experience like?
Yeah, I think the one thing that we would kind of preach is just be careful. Make sure that you're not too over leveraged. A huge issue that we have found is just borrowing all of your funds, borrowing down payment, borrowing renovations. When you're that leveraged and the market does turn and things take longer than anticipated and you have a low reserve fund, I know the numbers can seem very alluring, but if it's all borrowed, even though the returns are very attractive, there's even obviously more risk and more issues that could be uncovered if things go wrong. People have obviously been successful doing it, nothing
Until they're
negative
not.
against it, but there's always a time
Yeah,
and a place where things unfortunately do go wrong. And
and rates were at all-time lows. So it was a lot easier to say, hey, I can borrow this money cheaper than any other money out there. I'm just going to keep borrowing and buying properties because properties are going up. But now the mindset has changed a lot, and using debt is a lot more risky today than it was 2 years ago.
very true.
Yeah.
Yeah, there's a lot of coaches and gurus and investors who weren't around in 2007 and 8 because history doesn't repeat itself, but it rhymes. The crazy thing is that the people who've gone under these days were way bigger than the folks who went under back in 07. Yeah, so I saw who went under back in 07, and I studied what happened. Like I knew who their coaches were, so I asked them. I talked to their investors and whatnot, so I understood what went wrong. And then I see people who do like 10x the size business models here, like during the period we just went through.
Yeah.
And I was like, oh, I'm staying away.
Yeah.
Like I wish no ill will on anyone.
Yeah.
Yeah.
Right. I felt horrible for Alex.
Oh, yeah.
For example, I feel horrible for his investors.
Yeah.
Like, his in-laws, he owes them like 130,000 promissory note money, and he lives in their basement now. These are your in-laws.
It's tough.
Right? I do not wish that upon anyone.
No.
But these are the truths about real estate investing.
There you go.
Yeah.
Right?
Again, it's having your eggs in one basket. Like, let's diversify a bit.
Yeah.
Yeah.
And I know you guys are all about lending. It's
No,
okay.
yeah.
It's okay to invest with some cash, right?
Yeah.
Yeah, totally. Yeah.
Right.
What's your take on the Ontario market right now?
Everyone I speak to is trying to stay away from exposure to the Residential Tenancy Act, the Landlord Tenant Board.
Yeah.
So a lot of people are looking at commercial however possible,
Right.
Airbnb, hospitality however possible, industrial. But the problem is like industrial, for example, like that ship was a long time ago. Like that market was on fire during the pandemic.
Yeah.
So a lot of those people like were bigger players.
And has the industrial market not seen the decrease that the residential did?
I don't really watch it,
Yeah.
so I can't really say.
Yeah.
But if you bought right, you should be good.
Yeah.
Like I have a friend who has a manufacturing. So I'll say this about industrial. It seems that everyone's rents are going up, and from the people I hear from the tenants, and they all resign because there's nowhere to go, and there's nothing to buy.
Yeah.
Right. So it still sounds like whoever owns industrial is in the position of strength.
Right.
The tenant's in the position of weakness. Versus in residential, the tenant has the position of strength.
Yeah.
Not equity side, obviously, but in terms of the short-term control of the property, the tenant has control. And the same with commercial office. Who has negotiating power in there? Like I don't know what Toronto's vacancy rate now. I think it's like 20% or something. Toronto office vacancy. And at the same time, we had Greg Hapster on the show, who's a friend of Jesse. Jesse knows him. Like he's fully occupied now on his Calgary office spaces. Yeah,
Nice.
and for like a decade, it was like I think it was like maybe 60% occupied.
Yeah,
and even still, some of that was like what they call it, like people were paying rent, but they weren't occupying the space.
Yeah.
Right. So it's like phantom vacancy.
Yeah.
Right.
Right. And now the pendulum swung. So yeah. So yeah, it'll be interesting to see. These are interesting times.
It is
Very
It
interesting.
is.
Do you see, actually, question, do you guys see any deals around commercial office, around conversion?
Yeah, we don't do that sort of stuff really. Like we'll do some, but it's never commercial conversion. Like
What kind of conversions do you see then?
just from like some of the student housing, they can be converted into some of the multifamily stuff, or the other way around. So that sort of stuff, but we don't see a lot of that. Like adding suites, those I guess you could consider conversion, but we won't consider like anything that involves a large, like a permit for a large garden suite or addition or that sort of stuff. It's just more risk. Yes, there's good opportunity there, but it's just more risk when you get into the permitting side and having to get all the different inspections to make sure everything's up to code.
And it could easily be a year to get it done.
Yeah.
For example,
And it seems like the permits take forever here too.
everyone says they're fans of Bill 23.
That's all I've heard though. Like that's every time I hear someone, they're like, "Oh, it's taking me forever to get the permit."
So Hamilton is an example. Like they allow fourplexes. I'm doing air quotes for the listener. They allow fourplexes. The development charge difference between triplex and fourplex, just the development charge difference is $90,000.
Oh my god.
So how on board are you really for fourplexes?
Jeez.
Right? And also the requirements for the property are way different. Like you need like an extra like 3 inches in the basement for ceiling height, for example. So don't quote me anyone, but I think you need something like 6'9" in the basement for a fourplex or a triplex, versus for a basement apartment, it's usually just like 6'6", 6'7", right? So again, even though they're open for business for fourplexes, they make it way harder.
Yeah.
And then from our experience so we've done garage suite and conversions. So we lump that in with garden suites. I call it a garage suite. And then if I really want to be a jerk, I'll say, we rented out garages for $2,200.
Yeah.
But that $2,200 garage is a 2-bedroom, 1 bath. That cost my client $120, $130 to do.
Yep.
And that seems to be a much bigger budget than you guys are usually seeing for your renos.
Yeah, and with those garden suites, we've never seen the appreciation or increase in
it won't
value,
appraise.
right?
It won't appraise.
It won't.
It's too new.
Yeah.
And just to clarify, that's a garage conversion.
Yeah.
So there was already a gorgeous detached two-car garage on a concrete pad that already had much of the utility hose already hooked up. You go from scratch.
Yeah.
Like you drop, like, basically pour a pad, drop a tiny home on it. You're talking 250, 300. Right? And it won't appraise until maybe 2 years from now.
Yeah. You need comparables. You need other sales in that market to be able to understand what the value of that is.
Right. So you guys, well, because there is no exit, it's not something you guys would be looking at, right?
No.
Right.
Short answer. But like if it's a reno of a garage, maybe, but it's nothing to do with permits. If there's permits involved, we're not getting into it.
Because of how long do they take to permit?
How long they take, the extra risk. We just don't understand the construction side of the market in Ontario. We do a tiny bit of construction in Alberta, but it's not our focus. We're focused on the short-term renos, in and out, refinance or sell.
And typical refinance, are going to a Schedule A bank.
Yeah.
Right.
Yeah.
Exactly. Yeah.
Actually, good question. How many people are hanging on to the property after? How many of them are going for a refinance for a long-term rental or versus selling?
I think right now it's more towards flips. So I'd say 60-40 around.
Right.
Flips to BRRRRs.
I bet you any money, if it's Ontario, it'll be leaning towards selling. If it's in Calgary, I bet you more of them will lean towards holding.
No, our bigger clients are selling in Calgary. They're flipping them still. I'm just trying to think of all of them, but I think the majority would be flipping in Alberta too.
Interesting. In my experience, generally it's easier to find a flip project than something you want to renovate and hold.
Yeah.
Because especially if you're good at it, you're usually really picky on what you want to hold.
Right.
You're looking for like a gorgeous, something you can turn to like a gorgeous fourplex, for example. And those don't grow on trees.
Yeah.
Right? Versus a $600,000 single family home. You can find a lot more of those.
Yeah.
And you generally don't want to hold those because they won't cash flow.
Yeah.
So sorry, I just put a whole lot of words in your mouth.
It's all true.
So final words, anything else you guys want to share?
I think I covered everything on mine. If you have any questions, comments, if you're even thinking about private lending, you just want a second set of eyes before you lend out your capital. If you're a real estate investor and you want someone to review your deal, we're more than happy. We do those all day long. My email is Ryan, RYAN, @chmic.ca. More than happy, reach out, love to jump on calls and just help the real estate investor community and private lending community either become more financially literate or help them mitigate and reduce bad deals, sharing all the insights that the company's learned over the 45 years being in business.
Yeah. Calvert's all about education. So whether it be us helping you with your projects or you have another project you want advice on or you want to talk about our fund, we're happy to talk about it. So reach out with any questions. Contacts on the website.
It's funny with Calvert because I had numerous people say I should have you on the show, and again, you don't pay anyone to do any promoting for you guys.
No. We don't do a lot, but we enjoy coming out here and talking to you guys and just being out in Ontario. I think the face-to-face stuff is a lot more valuable than our Zoom stuff that we were doing in COVID. So we try and get out here at least once every quarter.
And you go to a Leaf game?
We went yesterday.
Last night.
Yeah, we were bad luck, I guess.
Yeah.
Are you a Leaf fan?
Sadly, yes.
That was a long answer.
That was a big pause.
That's pretty much every Leaf fan. They don't
Yeah.
Because you're, it's kind of like those like marathon runners. You're just a sadist for pain.
Yeah.
All right, we'll leave it there. Thank you guys for coming on the show.
Thank you.
Everyone.
Really appreciate it.
We lost the shit.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. That link is also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, Feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.